Be Wealthy and Smart, episode 1192.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about inflation being the lowest in 2 years and what that means for the stock market. So recently, the Consumer Price Index came in at 0.4% last month, which was pushed a little bit higher by rising shelter and used vehicle and gas prices. But it was in line with Wall Street expectations. That meant that on an annual basis, the inflation rate was 4.9%, which is a little bit less than the estimate and providing some good hope that the trend is now going to be lower. It actually was less than the 5% estimate and the lowest annual pace since April of 2021 and below the 5% rate in March. So if this trend continues and inflation continues to get better, we're moving in the right direction. Wall Street will interpret that positively. Quincy Crosby, Chief Global Strategist at LPL Financial, said today's reports suggest that the Fed's campaign to quell inflation is working, albeit more slowly than they would like. But for financial markets, today's inflation print is a net positive. As you know, the Fed has increased rates 10 consecutive times, totaling 5 percentage points, and taking borrowing rates to their highest level in nearly 16 years. But the Consumer Price Index, or CPI, has been considerably cooling since it peaked at 9% in June of 2022, which is why we've been able to see the stock market rise. The only problem is inflation is still well above the Fed's target, which is only to have 2% inflation. A lot of the inflation that we're seeing is in shelter costs, which make up about 1/3 of the CPI weighting. That increased 0.4% for the month and is now up 8.1% from a year ago. That number is lower than previous months, but it still is a key inflation driver and showing that inflation is still causing problems. Of the 6 grocery store indexes the Bureau of Labor Statistics uses to compute food prices, 4 showed declines, so we're moving in the right direction there. With milk, for example, it fell 2% in price, which was the biggest monthly drop since February of 2015. Also, finally, egg prices, which had been one of the biggest gainers in food prices over the past year, fell 1.5%. taking the annual gain down to still a whopping 21.4%. Taking the annual gain down, but still 21.4% increase over the last year. So the market reacted by traders lowering the odds that the Fed would raise interest rates at the June meeting to only 20%. This is according to the CME Group's FedWatch tracker, which is pricing in the Fed funds futures market. So if only 20% of traders think that the Fed will raise rates in June, oftentimes the Fed does follow what traders predict. I think a lot of this low prediction of an interest rate hike in June is also because of the banking crisis. When you're having a banking crisis, the last thing you want to do is increase interest rates. You want to provide liquidity, not take it out of the market. I think the banking crisis eventually will cause the Fed to have to ease, but before that, it's highly likely that we will get a spike in interest rates right before the peak of the banking crisis. We also could see interruptions in commerce, which has already been happening. I've had reports from my VIP Experience members that grocery stores have had some problems with their electronic cash registers, meaning that the systems have gone down and only if they had cash were they able to complete their transaction. Just Wednesday of this week, one of my members reported this: crisis at very popular supermarket just now. All systems down, cash only. People were freaking out, abandoning their carts. Very eerie feeling. Fortunately, I was prepared with my secret cash supply. Thank you, Linda P. Jones. Because I've been telling members that they need to have extra cash on hand in case we do have an electronic breakdown or some sort of an internet outage. When you have some instability in currency and in commerce, strange things can happen. And things like this are not really all that uncommon from things that I've read. So I've prepared my people to carry extra cash, have extra cash on hand at home for a possible time when you need to be on a cash basis. So besides possible interruptions in commerce, what else do we need to plan for? Well, I think right now people are very bearish on stocks. I think they're a little too bearish. And when people are bearish, markets generally move higher, which is what we've seen since the October lows. And I've been saying that I think we're going to see the markets continue to move higher as we have too many shorts in the market who are going to have to cover and buy back stock and close out their position. Now we even see Jamie Dimon talking about not wanting to have anybody be able to short bank stocks. He wants to make it illegal. There is a large short contingent that will need to cover and close out their positions. Now, I've been saying that I thought we'd see weakness in inflation numbers and inflation decreasing this year, and that in the second half of the year, that would mean that the Fed would not continue hiking interest rates. That forecast is looking right on track right now, as it sounds to me like the Fed may pause in June and beyond as we have this banking crisis to contend with and a possible slight recession. I'm not seeing anything super deep like a lot of people are predicting. I'm seeing things being slightly weaker, but the reason I say that is because earnings have continued to beat expectations. Even though we've had a difficult time to operate, businesses have done well and their profits are good and they're beating expectations. You don't have that when you're going to see a really deep recession. So I do think we're due for volatility here and some craziness with the banking system. So I do recommend having extra cash on hand. Precious metals is always a good idea too. Extra food, water, medicines, etc. This all seems like a controlled demolition to me, and we just have to get through it and to the other side when things can start to get better. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified of new podcasts as soon as they become available. And all of my podcasts are in my wealth mentoring library on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.